Is AI a bubble? Are we in a bubble? And if it is a bubble, what kind of impact would it have on the global economy if it were to pop? And what does that mean for you and me, the average person day to day? Where do you think is the best place to start with this? Because it's a big one.
Man, it's really hard to say where to start. I think one of the things that we could talk about is like the AI space, as far as like what are the major players that we're dealing with today. I think that's a good place to start.
Do you have them written down?
So I have a few of the major players written down here. We have obviously, the big FANG stocks, which I forgot, like, what did we call them now? The Magnificent Seven.
Mag 7.
So we've got Microsoft, Apple, Meta, Tesla, Amazon, Google, and then the rest of them that are in this AI sphere that we want to make sure we talk about is TSMC, Taiwan Semiconductor Manufacturing Corporation, which is actually the fab, like the lab where the NVIDIA chips are actually made, if I'm not mistaken. Then we have NVIDIA, Broadcom, and Samsung in that list as well. So essentially, these are just like the biggest companies that we've seen in tech over the past 10 years anyways. And it just happens that they are the best positioned, right, to take advantage of what's happening with AI. I think it was like a year and a half ago, I bought some research about this, and I almost got mad because like this guy was telling us like about all these AI stocks that are going to like change the world. And like it was Microsoft and Google.
Yeah, those aren't really revealing anything too crazy, but I think that's a really good place to start. So we mentioned the Mag 7, and so the Mag 7 is titled that because of how truly massive and influential they are. And I think that's really the most important thing to double down on in terms of if this is a bubble, here's largely why it's a bubble. So the Mag 7 makes up 34% of the S&P 500. That number obviously changes based on the pricing of the assets and how they move. But 10 years ago, that number was barely over 12%. And so if you think about that, what's been preached to all of us over the past decade, maybe 15 years, everyone on social media has been spewing buy the S&P 500, buy the S&P 500, buy the S&P 500. And so if you go look at most funds, that could be retirement funds, that could be people's personal funds, a lot of it is attributed to the S&P 500, usually through the vehicle of a index fund, right? Like the huge financial institutions we've talked about. You can buy a Vanguard index fund that allows you to have exposure to the S&P 500. And the whole promise of that was that you're getting a ton of exposure. But when 7 companies that are all betting so much on AI being what they think it can be, that is crazy levels of risk for something that was supposed to, by design, alleviate risk, which is insane. Like those numbers shocked me.
Yeah. And it's even gotten to the point where I think NVIDIA alone is like 5% of it or something crazy like that. Yeah, it completely takes away this idea of having this place where you can safely store your wealth and think that everything will be fine. Don't worry about it. I mean, if anything happens, right, regarding just the narrative around AI. We saw it earlier this year. We talked about it last episode with the DeepSeek news, right? Like NASDAQ goes down by like 3% in a day because of some news that actually was months old about the DeepSeek scenario. So anyways, definitely a lot of risk in that. And as some advice for people who are investing in this kind of way, and this isn't financial advice, but I'm just trying to help you to think about the different things that are happening in the markets. You can also use an equal weighted S&P 500, right? So that you're not having to deal with the fact that there's these companies that are way bigger inside of that index. And so that way you can protect yourself a little bit in case of these massive drawdowns in these specific companies that we're talking about.
Totally. Yeah, and that's really important to know that you do have that option. I was actually watching a movie yesterday and I just I was like, man, Hollywood has tried to convince people that money is scary for so long. It was a pretty old movie and the classic was like, they went to their money person and they didn't know how much money they had. It's like they've been trying to push this whole thing of like lack of financial literacy for a very long time. I think it's deliberate, but who knows? Maybe I'm wearing a tinfoil hat. So knowing all of these things and knowing what your options look like can allow you to not get wrecked when everyone else gets wrecked, or at least not as bad. And so with this, with 34% of these companies betting on this, when most people are just, their only exposure is to an index fund that's not operating like what Keith just said, if the stock tanks for those, most people who have most of their money in the S&P 500, they can't weather a storm, right? Like they can't. They're banking on this being their livelihood, especially as other assets have not performed as well as the S&P and stocks have, and people's incomes have not risen. People are very reliant on this. And so why I think it is likely a bubble, financially at least, is because there's so much extra money in the system, and they do need to decrease how much money is out there. And a great way to do that is a collapse, right? And who does it impact? It doesn't impact even the companies that we've mentioned, because they're too big to fail, right? It's kind of like The Big Short, what they've talked about, where there will be a golden parachute. They will be bailed out if it fails. They won't even care. Like, the people making these decisions, it will impact their life zero. It'll impact people like me and you. It won't impact the people making these decisions. So that's why my mind went there. And I'm at the end of this, Keith and I will try to debate back and forth why we think that it is. But I wanted to just to bring that to your attention, because a lot of people that I know, they just religiously put money into the index, money into the index, money into the index. And that has proven successful for a very long period of time. But when you're that reliant on a small amount of things, which is really a big bet on AI, that could get ugly really quick.
Yeah, like just speaking to this concept of like in the past, it's always worked, or at least most of the time of the past 100 years, it's worked. The thing about financial markets is that the things that work always work until they don't. And
Absolutely.
people have been asking for some book recommendations. I think I have two at least that I'll bring up throughout this conversation. One of them now that just came to my mind is The Misbehavior of Markets by, he's French. His last name is Mandelbrot. But the idea here is that basically the long tail events, meaning the least likely events to happen, are actually the most catastrophic ones, and they happen more often than we can expect them to. And so when it comes to looking at the idea also of the returns that you get from a specific portfolio mix, right, over time, for instance, the 60-40 portfolio, 60% stocks, 40% bonds. Over the past 20 years, that's actually performed really bad in the United States. It's like the things that always work just won't always work. And usually the longer that they have worked, the more likely that there's going to actually be an event that changes that in that near future. So
totally. And history doesn't repeat itself, but it does rhyme. And there's always a reason why it won't, right? In terms of narrative, right? And this one is probably the most compelling one yet, because this is a technology unlike we've ever seen before. But I do think it's a good idea for us to dive deep into the nitty gritty of the tech, because this is something that I've had firsthand exposure to in terms of my use for it. I've tried almost every AI tool in the market, within reason, of course, the big ones. There's some tiny ones popping up every single day. Actually, a fun stat before we dive further into that is that 95% of generative AI pilots aren't making money. So everyone's just kind of throwing stuff against the wall in hopes that something sticks. And also, when things go like this, much like the .com bubble, if you just threw .com at the end of your name, you got a ton of money, right? And the same is true with AI. Every sector in the entire world is attempting to piggyback off of this potential gain, the FOMO that's taking place, to get more funding, to get more exposure. And the people aren't making the money. Even the big dogs aren't making the money. OpenAI is incredibly far from being profitable because there's so much expenses involved with this. It's something that I wanted to make clear. And then before we dive deeper into the tech, a bubble doesn't pop because the market can't reach what people are projecting. Like, there's a scenario where AI does everything the most bullish people are predicting, and the bubble still happens, because a bubble is created when mass FOMO results in reckless investments that leads to the evaporation of the investments at levels that creates a cascading effect of economic impact, right? So both things can happen. Like, this could be groundbreaking technology, which I believe that it is, and a bubble could still be there and it could still pop.
100%, man. And I think too, like, and we'll talk about this a little bit later. The way that I'm always looking at this is like, we have the memes side of this, right? So we have like the cultural aspect of what's occurring, and then we have the market side of this, and like the actual numbers, what's happening with these companies, how are they valued, and so on. And I think we'll dive deeper into that a little bit later, but I just wanted to kind of put that into the air as we continue this conversation. RD said Sora 2 will wreck film and TV business. And from what I understand, that is not just a random perspective. That's actually a very nuanced
Fact.
and perspective coming from someone who understands the business. And so that's a super interesting thing to hear. And I do think that one of the things I think we'll talk more about is like, all right, so we've got large language models. Now we've got, this more colorful version of generative AI, being that we have video being created. I honestly just believe that like we're still looking at the primitive versions of what this technology is going to be capable of.
Even what it is capable of right now, to be honest.
Yeah. So that's one thing that I will put in my corner for one of my points around whether or not we're in a bubble here. But we can keep moving from there, I think.
That's a good point, that if it was RD who made that, where Hollywood's going to be so impacted by this, because like throughout history, and maybe this is an optimistic view on this, if there is one, where throughout history, the access to creating media was gatekept by so much friction, costs, and connections. Like you needed so many things to make a movie, like so many things. And you need to know the right people. And that's why the people who had those positions of power used that. Thus the whole Me Too movement and all that stuff, right? Like it led to a lot of bad things. So this could, in theory, if you want to take an optimistic approach, definitely democratizes the ability to create things and brings down the cost dramatically. Because to build a movie, when you hear these budgets, there's like hundreds of millions of dollars to make these movies that theoretically could now, in the next few years, be made by a kid in his bedroom. Like that is insane to even think about that concept.
Yeah, I mean, from the effects and like whether or not you have to buy a car that then need to blow up, like that's all gone. And then the actors themselves is what they're kind of talking about as well in that business. It's like, well, do you need to hire Tom Cruise? You can just AI Tom Cruise.
Use his likeness. Yeah. And that was really why they were the first to be the most vocal about this, the writers in Hollywood especially, and I think the actors too, where they protested and went on strike, I believe, against this. It was pretty early in the whole AI stuff. This is probably about a year ago. And it's because they saw what was coming, right? Like this is going to only get better and better and better. And eventually no one's immune to this. I think that's one of the scariest things for me too, is that there is no one who is immune to this. Because if you think about human beings to their truest sense, we are large language models with some heart, right? Like that's really like the biggest difference between us in terms of how we function on an intellectual level. It's not that dissimilar from how an LLM works. Like obviously I don't understand the deep inner weavings of it. I'm just talking about grassroots. Like what do? We take in inputs and then we analyze them to then produce an output, right? And obviously we have feelings, we have soul, all that stuff. But I'm just saying on a technical sense in terms of your ability to convince someone that you are real, right? Which is called the Turing test, is to test a machine's ability to exhibit intelligent behavior equivalent to or indistinguishable from that of a human. So that's pretty important to talk about. So one of my favorite futurists, it's crazy to think that that's a term, is Ray Kurzweil. And so he's been talking about the Turing test and all of the things going in and being involved with large language models and AI for a very long time. He actually projected a lot of the things that we're talking about in the 80s, 90s, and was going to these conferences and standing in front of people saying the stuff that we're experiencing. And he was getting absolutely torched and roasted. And most of his predictions have come true. And so he's got 2 books. He's got The Singularity is Near. And then his most recent book is The Singularity is Nearer. And the term the singularity, what it means is essentially when human beings reach a rate of technological progress where rapid advancements happen so fast that they're indistinguishable from each other because they just all blur together. And so the state of change that he's expressing is essentially, and this probably isn't that far away, is that we will have Nobel Prize levels of enhancements in different fields every single day, right? And so when that rate of change happens, what is life? Like everything needs to get redefined, because if you really go to like the 7 layers of why of everything we ever discuss, it stops at a point because of technological limitation or limitation of some kind, right? If you don't like technology, it could be spiritual limitation, whatever, right? It comes down to a point. Whereas if we're saying that technology can keep you going further, if it can continue to progress, there's now really no constraints in how fast or how wide that can go.
I'm going to back you into a corner. All right.
Do it.
So if you believe that this is in the future, how far away into the future do you think that kind of a reality is?
I'd say probably 10 years.
All right. So if we're 10 years away from having that level of progress in technology,
yes,
do you really think that these $4 trillion companies in AI is like a bubble?
This is great. I think that it's a bubble, but it's one that will be manufactured by design to achieve an outcome, right? How do you take the money out of everyone's hands? Is you take their money, right? So if you tank the S&P 500 because through these stocks that can weather this storm, but the people holding them can't, then everyone's able to buy it back at pennies on the dollar, and then no one has skin in the game, and then it goes on and progresses the way that it can. So why I think that it's a bubble is because of the mechanisms surrounding the financial infrastructure that these games are playing, right? And so if we want to dive deeper into the interweavings of these things, is that they're all in bed together, man. It's like very circular in terms of how they invest with each other. And so let me show you a chart here that was posted by Prof G, who's awesome. I recommend watching his podcast too.
Scott Galloway.
But here's Scott Galloway. He's awesome. So here's just a breakdown in a chart of the different investments and how there's circular investing, where basically like one company will invest in one company, then invest in another company, and they're all going back and forth. And a lot of the investment being done, especially by someone like OpenAI, is being invested with money they don't even have. So it's like, we've always discussed this many times, that everything is fake, but this is like fake on fake on fake, investing with each other to create this hype in this machine and to expedite progress. There's also something here too where long term, I think this stuff's going to be absolutely insane. And it also kind of has to be, because we talked about this last episode. There's a massive segment of the workforce that's needed in the first world. There's not people who will do these jobs, not for what the businesses can pay them or are willing to pay them. Like this stuff is really, really needed. And then I think the downstream of that is terrifying in terms of how do we deal with that? Does universal basic income become a thing? There's so many things to discuss with this, but this chart should terrify you, in my opinion. Look how the money is flowing.
Yeah, I mean, so I've been looking into this a little bit, and the crazy thing is like, yeah, these companies are investing some free cash flows that they have into one another. And the other side of this is that these companies are basically doing like these mergers and then using the increased valuation from that to then like raise money from the public at a higher valuation. And that right there is definitely like bubble talk. As far as like using these mergers and acquisitions and trying to do these like funny business with financial engineering. So I do see that there.
So here's my argument for why it's a bubble financially. I don't think it's a technological bubble. I think it's a finance-based bubble. And I think it's one that's deliberately executed for the outcome that they want. If you go back in time to the .com, right? Everyone who was saying the internet's going to change the world was right. But very few people won from investing in it. Very few. Very, very few. Right? Because nobody could have the foresight to see this is going to tank and then come back. And I think that's the natural adoption of technology, especially because I think it's kind of an interwoven systems that are broken, where the finance system, maybe it's perfectly designed and I'm ignorant to this, but it seems like it's structured in a way where this kind of stuff happens whenever there is a big technological shift. And again, I'm tinfoil hat guy. I think it's to take money out of the system to put it back into the hands of few people.
Fair. Yeah, it's always tough to look at these particular bubbles like the .com one. I'm going to make the argument of like why this time is different kind of thing, which is always the losing argument.
No, but this may be the one where it's not. And I know everyone has ever said that in like every debate like this, but this is the one where, because even if the internet was enhancing humans, this is the human in terms of the work output.
Yeah, man. I think the only thing about this in particular that I think is interesting is we're also just living in a different kind of market regime where we have seen over and over again the levels at which governments all over the world are willing to support markets, and how fast I think if we do get one of these types of bubble popping types of moments, how fast it'd be over. Because the thing is like the impact that this technology is already having on the economy, right, is there as far as people losing their jobs, right? So like we're already kind of like getting through the tougher part of this potentially over the next couple of years. And then from there, it's just going to be like, all right, now we've got this crazy technology that can change everything and reduce all costs in business and create incredible profits that we've never seen before. Now, the way that actually plays out economically is way above me. I'm not gonna lie.
Totally.
Yeah.
I don't think there's anyone that's not really above. I think even the people making the rules haven't really figured out everything. But like, let's take the techno-optimist approach, which my client is definitely a techno-optimist. Like he sees the glass half full in every debate in this, like all the time, every time, which is like, I think it's also easier for him to say because he's incredibly financially comfortable and he's also immune to most of the things that you and I experience when we walk out in the street. Right. So it's easier to have that perspective when you're able to do that.
Is the capital transfer of a bubble collapse by design, or is that a side effect?
I think it's by design personally. But in terms of the optimist approach, so a lot of the things that we even believe as humans, like we are parrots, man. We are monkey see, monkey do. And so with that, like a lot of the things that we're fighting for in terms of how things used to be, if technology can achieve what these people are saying, and of course they benefit from us achieving it, but like, let's play devil's advocate, and maybe that's literally in this sense, who knows? But if the technology gets to a place where everything is redefined, is that the whole point? Is that why we're here? Is that how you get into the intergalactic federation where you can then commingle with these different species that they say are speaking with us and intermingling with us? Is that the point? I understand in the short term, there's not an immediate concern where the climate or it's unlikely there's gonna be a natural disaster that could wipe us out as a species, but over a long enough time horizon, that's almost an inevitable reality if we stay here, right? And so I understand everyone's perspective in this. I understand why you're afraid that your job may be taken. I understand it's going to be very painful over this transitionary period. But also, are we screwing our grandkids by slowing this stuff down too, right? Because of course we're comfortable and we're all we're concerned about is tomorrow. That's part of the system. But as a species, you got to play longer games. Well, I think it's worth having these conversations, and I think everyone in the world is, because we're finding the interconnectivity of basically everything that we talk about, right? So let's get back on topic here in terms of why it's not a bubble. So you said emphatically, not a bubble. Explain to me why.
Okay. I didn't say it emphatically, but let's talk a little bit about some of the numbers and stuff and valuations, because this was where my mind first went to. When it comes to trying to measure a bubble, one of the things that one could look at is the price to earnings ratios of these companies that we're talking about. Now, the price to earnings ratio measures how much investors are willing to pay today for each dollar of a company's current or expected earnings in the future. A high price to earnings ratio means that investors expect strong future growth, right? So they're paying more today for what they expect will come as profits in the future. A lower PE means investors will expect slower growth, or that a stock may be undervalued even potentially. So there's two ways to look at a PE ratio. One of them is like looking at the PE ratio of a company over time. And then the other is looking at the PE ratio of a company versus the average in the market, right? And there's probably tons of other ways to look at it, but these are two primary ways to look at it. And with like these companies that we have right now, for instance, Google and Nvidia, it's like their PE ratios, for instance, the S&P 500 right now is at 29, which is historically pretty high. For like the whole S&P 500 to have an average of 29 is really high. And then when you look at Google, though, for instance, in that mix, it's actually only at around a 26 PE ratio. Nvidia, on the other hand, is sitting at a 52 PE ratio with a 52% profit margin, by the way, on $165 billion of revenue. So my main argument here is going to be that when we look at the PE ratios of where they're at relative to like bubble times that we saw in 2000s and even earlier in history, I'm just not certain that this bubble that we're looking at can't go on for way longer than anyone would expect. And I think that's my whole thesis on this, is that like, yes, PE ratios are relatively high through history. Valuations have completely run away from revenues. I mean, I read this article from Downtown Josh Brown last night, and I didn't even realize I was reading him. I was like, oh, this guy can write. And it was about Netflix and how everyone was like talking mad smack about how Netflix and the earnings of that company were nowhere near the valuation of the company for so long. But what continued to happen was that even with that company trading at like 100 times price to earnings, it continued to grow and it continued to grow and it continued to grow. And eventually, yes, it caught up to the narratives. It took over Hollywood. And like, not saying that that has to be what's happening here or that that has to happen over and over again throughout history, but I equate what's happening with AI a lot more to that, to where, yes, there are these crazy narratives of what this technology can do. But when you look at a company like Nvidia and you look at their profit margins, you're talking about a 52% profit margin on $165 billion of revenue. What does that look like at scale throughout time as they've increased their profit margins as they've grown the company? Now, obviously, a lot of that has to do with the fact that they have pricing power, right? But there's just a lot of stuff happening in this market to where I think that people are absolutely underestimating where this will go and how long the markets can play these games of investing into one another in the circle of that. And we won't even have a chance to get these companies any cheaper than we have today. So that's just kind of how I look at it.
I think it's a completely fair argument and position. And I do think that money is already very centralized in terms of who it's in the hands of. And so that could bode well for how long this can go on for. But even as you were just explaining that, like I'm thinking about all of the constraints in terms of this expansion of this, right? Like there's so many dependent variables that are reliant on that growth. Like these things have to happen. And why that scares me the most is because people are involved with all of those dependent variables, right? And we've talked about this so many times, that people operate from a place of fear. And so I do think you're going to have a lot of constraints from like protests, from like people who are behind the scenes trying to sabotage things, right? And so I think the public perception will slow down the potential adoption, which I think could have a direct impact on the price. And that's also was another argument that I had in terms of it being a bubble, is that you cannot argue that it's definite. These models are being trained on other people's property.
Right.
like 110%. And so we talked about this in a previous episode where they're obviously doing cost benefit analysis. And that's what's playing into all of this, where they're basically like, who cares? Let's front run legislation. And so even if we do get penalized later, we'll be so rich it won't matter. Like these will be a drop in the bucket compared to the economic value that we create. But there's definitely some shady practices. And that was directly tied to this whole scandal where when you look at these models, like it's being trained on my content, your content that we worked so hard to create, and it's just getting fed into this machine. Like, how is that fair? I've got to think there's going to be a lot of legal consequences in the near future. Will it matter in the grand scheme? Probably not. But I do think that may slow the rate of progress or potentially impact a bubble popping. Another point that I had for it being a potential bubble was the fact that when OpenAI announced their like disappointing revenue numbers to profit, it didn't impact the public perception of them at all, where that kind of news on a public market would have had a very big impact on price, right? Where it wasn't even a news headline because it didn't impact you or me.
Yeah, man. And so, like, taking that into account, it's like a lot of this isolation that some of these large language model companies and development companies kind of have is like that could help to continue the bubble because no one's participating in the valuation process.
How is that legal, man? Like, I know that we don't have laws in place and we couldn't have foreseen that this would be a potential reality, but these people are literally playing God. And you and I have zero way of benefiting or saying no. How the hell does that happen? Like, that's crazy, man. We've done a fair amount of kind of doomsday-ish stuff. So how can we make this end on a positive note in terms of how can you take advantage of this AI change, whether it is a bubble or it's not? How can you make it impact your life positively?
My thing is, since I don't believe we're in a bubble, buy Google. No, on a serious note, man, my only thing, I put out a video on my channel about this. I'm like, why you can't ignore crypto and AI. Same thing for crypto. It's like, oh, crypto's going to take away all of our freedoms, all of our privacy, and this and that. Maybe. I'm going to own it. I'm going to know how to use it. Because if that's the case, then I probably should.
Totally.
So, same thing for AI. Play around with the tools, learn how they work, make some stuff. You can do way more than you think you can. I've watched one of my really close friends. He actually has done the things that I'm saying that would be helpful, which is like, he just started playing around with AI. He started putting these little things together. He was like, hey, Keith, how could I do something that's helpful for you? Okay, yeah, like these are the types of things that I'm working on. Oh, here it is in like a few days. I'm like, okay, wait a minute.
Yeah.
What the heck? And he's, he's definitely not, and he's very intelligent. So let's be clear about that. But, it took him like a year to be able to do this kind of stuff. And that's from like no tech background.
Yeah, and that's possible here. But like social media kind of democratized education and access to information, and this expedited that and like to an exponential level where you can learn something so quickly. Because most of the time that was spent was the 0 to 1 in social media when we wanted to learn something before, is because you don't know enough about enough to spot a grifter or BS, and so you spend a lot of time going down the wrong avenues. Whereas this can get you closer to the target like this, and that just does wonders for you. And I call AI the anti-stuck machine, because that's really what I use it for a lot, is where I used to get stuck on something that would take me days or cost me a lot of money, I can now deal with in a matter of hours. And so if you're someone who's listening to this and you haven't educated yourself in a very long time, you probably have a bad relationship with learning, and AI might be the exact tool that can allow you to change that relationship and build whatever life that is that you want, right? And so there's a lot of people who I think will see a positive improvement to their life. Maybe, like, let's say for an example, you're working at a job that you don't love, that's more manual, and you've wanted to work from home, and you can use these tools to grasp concepts that previously would have taken months or years, and you can now learn them in weeks and use that. So I think the people who adopt this technology the earliest and the most aggressively, they're going to win.
Yeah, like the thing that's come to my mind is, if you have a job right now, replace your job with AI.
Yeah.
Like do it yourself, because otherwise it's going to happen and you could potentially build a business off of that. Ken says, so is AI a bubble?
That's for you to decide.
Yeah, man. If I had to put my stake down in history, man, I'd say, heck no, we're not.
No. I would say yes. From a financial perspective, I think long-term it'll be just like the internet, even at a bigger scale, where when you zoom out long enough, even the tank that will be catastrophic to the everyday person will be a small bump in the road comparative to the technology and the impact that is made.
RD says, I think we're in a bubble for now. One of these companies will crash.
I think so too.
And if we get one of them to crash, I think it could.
The domino falls.
100%. So
yeah.
Is it different this time? I mean, my thing, and maybe I'm just completely wrong, is like I'm just not seeing crazy valuations in that regard. Like I just think that once we get to that point, then you can ask if it's different this time. But it's like we haven't even gotten to where I mean, already pointed out Tesla. Like, okay, yeah, Tesla's trading at crazy multiples, but the overall market is trading at higher than average multiples. But I would want to see it at double, triple the average multiples before I could say, oh, we're in a clear bubble. But that's just kind of how, guys, I'm very happy to be wrong about all this stuff. You guys can let me know.
Yeah, me too. Yeah, I like I can be totally wrong, and I probably on a far enough time horizon, I think I will definitely be wrong. Is what I'm saying, that I think it will be crazy, but I also think that it can get crazier really fast, and then that may be what makes the bubble pop.
True.
I don't think like in this moment it is a bubble and about to collapse. I think we're going to see a crazier hysteria phase, and I think crypto will play a role in that. And then, much like you had said that the guy that you watch had the thesis where we'll have the craziest crash of all time, I think that may be likely to happen, unfortunately. So you're in the minority of people who are even thinking about this stuff before it happens, which gives you a massive advantage to plan accordingly. So definitely take advantage of that, right? Like put some thought energy towards how you want to maneuver these situations and have some exposure, like Keith said, but also take some exposure off the table when it can change your life, and you can be prepared for some bad situations if they come.
100%.
Tony said, I don't think AI is a bubble. It's not going to burst. We're at the beginning of a large-scale transformation from a tech perspective. I think you're right, but I think both things can happen.
Yeah.
I think you can be right that we are at the beginning, and I think financially a bubble can occur, which is like, that would have been true for .com, right? Like we were at the beginning of a technological frontier, but people got burned financially.